live now. Hi there, everyone. Welcome to everyone who's joining this elliptic webinar on DeFi regulation and compliance. I see a number of people joining the webinar now. So we're going to just give it a minute or two while people log on, and then we will begin the session very shortly. So just bear with us for a minute, and then we'll get going. Hi there, everyone. I see a number of people joining the webinar right now. We're just going to give it another minute and we will then kick off. We'll just give you all a moment to get logged in and settled, and then we'll get started. Well, hi, everyone. We'll go ahead and get started now as some more folks continue to join us today. But thank you, everyone, for joining the webinar today. I'm David Carlisle, the Vice President of Policy and Regulatory Affairs at Elliptic. Welcome, everyone, to this webinar on DeFi regulation and compliance, challenges and opportunities. This is a webinar I've been looking forward to hosting for some time now. Firstly, because I think we have a truly outstanding set of panelists today, but secondly, because I think this is really one of the most interesting topics in the entire crypto space. I think anyone who's been following crypto closely for the past year and a half or so especially will no doubt be aware of the explosive growth of decentralized finance, or DeFi. At its height, there's been more than $240 billion in capital locked or deposited in DeFi protocols, which last year represented a year-on-year growth of more than 1,500%. Just this week, the Decentralized exchange, or DEX Uniswap, surpassed $1 trillion in total trading volumes that have been facilitated through its smart contracts. So, we're really seeing that some of the largest DeFi services are starting to rival major centralized crypto services in terms of the scale of business they facilitate. So it's a time of tremendous growth in DeFi innovation. Now, DeFi is obviously, I think, very notable and extremely innovative because at its heart, it represents an attempt to disrupt traditional finance, or the traditional finance sector, or TradFi, as it's often called now. But I think perhaps paradoxically, the rise of DeFi has in fact caught the attention of major financial institutions, which are increasingly exploring how they can leverage DeFi to bring new innovative products and services to their own customers and make their own services more efficient. Just last week, actually, the Organization for Economic Cooperation and Development, or OECD, published a report you can see here on the screen about the intersection between DeFi and TradFi, and how financial institutions are encountering and interacting with the DeFi space. We're lucky enough to have a member of the OECD team here today joining us, and so you'll get to hear from her fairly shortly. So, DeFi is definitely igniting a new wave of innovation, both within the crypto space as well as across the broader financial sector. But with that comes certain risks. I think we'll definitely talk about some of those today, but they could include risks around cybersecurity, market stability, consumer protection risks, as well as risks related to illicit finance and financial crime, among other risks. At Elliptic, we've written about some of the financial crime risks around DeFi in the two reports you can see here on the screen, a DeFi report we released last year, and a broader report on financial crime typologies in crypto that touches upon DeFi risks as well. These reports are free and available on the Elliptic website if you want to learn more, but in them we go into real detail about the way that decentralized exchanges and other DeFi services can be used in money laundering and ways to mitigate that risk. And I'm sure those are some issues we may touch upon a bit today as well, since they're high on the regulatory agenda. On that last point, DeFi also presents a number of significant challenges and considerations for regulators who are really beginning to think about in detail how they should regulate a space that, at least in theory, seems hostile to the concept of regulation, or maybe doesn't always fit comfortably within the existing regulatory framework. Back in October of last year, the Financial Action Task Force issued guidance in which it set out how countries should apply its anti-money laundering standards to DeFi. And more recently, we've seen country-level regulators start to really try and tackle DeFi head-on. And a great example of that you can see here on the screen is this report published by the Financial Services Regulatory Authority and Abu Dhabi Global Market back in April, which sets out how regulators there are thinking about how to supervise the DeFi space. And again, we're lucky enough to have a representative from Abu Dhabi here today who's part of the team behind some of this work, so we'll get to hear about that firsthand. So plenty of issues for us to tackle over the next 50 minutes or so. You can see there's lots of great literature out there on this that you can kind of take away as homework and reading after the session. But to help us understand it all, we've got three great speakers today. Just before I introduce them, a short bit of housekeeping. Just to let you know, we will aim to leave time at the end of the session for audience questions. So if you have questions throughout, just pop them in the chat and we'll aim to get to them towards the end. And just so you know, we will be sharing a recording of the session afterwards. So that'll be made available to everyone who attended too. So with that, let's introduce our panel of speakers. Firstly, we have Yota Nasser from the OECD. We're then joined by Barry West from the Financial Services Regulatory Authority and Abu Dhabi Global Market. And we've also got with us Nathan Catania from X-Ray Consulting. So thanks to all our speakers for joining us today. Before we leap into the discussion, it'd be great if each of you could just briefly tell the audience a bit about yourselves. So Yota, could we start with you, please?
Yes, sure. Hi, David. Hi, everyone. My name is Yota Nasser, and I work for the OECD Committee on Financial Markets, where I manage the committee's experts group on finance and digitalization. And it's the body of the committee that looks into anything that has to do with fintech. And we've published a report on DeFi earlier this year and on crypto asset institutionalization just last week. And my apologies for the background noise as well.
No problem. Can hear you just fine. Barry, could you introduce yourself to the audience?
Hello, everybody, and thanks, David. Yeah, hi. My name is Barry West. As mentioned by David, I work for the regulator here in Abu Dhabi in the financial free zone. I'm head of research and innovation within the fintech department, which also has the kind of data tech and governance component within it as well. So, you know, kind of what we learn and play with and build with is then kind of brought to life by the data tech and governance pieces. So we're very much focused on the DeFi piece, and as you mentioned, the paper that we've gone out with is something that we're very interested to collaborate with the industry on.
Great, thanks, Barry. Yeah, looking forward to chatting about all of that. And Nathan, over to you.
Hi, everyone. Thanks for having me. My name's Nathan. I'm a partner at X-Ray Consulting. The name X-Reg comes from the fact that we're all, at least the founding partners, all ex-regulators. So I myself, I'm an ex-regulator. I spent a few years at the Gibraltar Financial Services Commission. And Gibraltar is quite a unique place because it was one of the first jurisdictions to introduce a bespoke framework for what they call DLT providers, but what other places would call virtual asset service providers or crypto asset service providers or whatever jurisdiction decide to call them. But we were licensing and then supervising crypto companies that were establishing themselves in Gibraltar under the framework. Now, as a consultant, we specialize in crypto regulatory matters, and we work with both the private sector and the public sector. So with the public sector, we do work with some policymakers, regulatory authorities, law enforcement agencies, financial intelligence units, and we just help them really understand crypto all the way from like a policy perspective, what sort of approach should they be taking, all the way down to helping operationalize and develop regulatory frameworks, a lot of training and capacity building as well. On the private sector side, we work with private sector companies, but mainly pure crypto companies such as exchanges, custodians, wallet providers. And we also work with some like financial institutions that have an interest in crypto or some exposure to crypto as well. So yeah, I hope I can bring a bit of I guess we cover both sides of the industry, both the private and the public sector. So hopefully we can act as a bit of a bridge.
Great, thanks. Well, yeah, let's just get into the discussion from there. So, I think, firstly, maybe it's helpful to set the scene, and talk about, what is it about DeFi that makes it such an important issue for policymakers right now? And, what are some of the risks that policymakers perceive and have on their, at the forefront of their mind? And, are these sort of immediate risks we face now or longer term problems? Jutta, maybe we can start with you just to kind of cover that off. I know it's been a focus of yours in your work.
Sure, no problem. So it's actually a very interesting question, and this was the basis for our first report, which is entitled "Why DeFi Matters and the Policy Implications." And this was work that we discussed in our committee in 2021. The reasons that made us look into this are first, the speed of growth of DeFi markets, and you alluded to that. At the peak of the market last November, we had $110 billion of crypto assets locked only in Ethereum-based DeFi protocols, and this represents a 50-fold increase in one single year. So it's explosive growth. And these markets are not operating within any of the regulatory frameworks of traditional financial markets that we are used to and which safeguard market integrity, consumer protection, and ensure financial stability. And then those DeFi markets are actually very much interlinked with mainstream crypto, such as Bitcoin and Ether, and there are feedback loops between the two markets with the huge volatility of the mainstream crypto and with very high use of leverage. This kind of increased use of leverage combined with the huge volatility of crypto intensifies the fragility of these markets. And then the cherry on top was what we observed as increased institutional investor interest in those DeFi decentralized markets. Their increased adoption of institutionals of crypto assets that brings this interconnectedness between decentralized finance markets and traditional finance markets. And although today this institutionalization is dominated by mainstream crypto, Bitcoin, Ether, the large stablecoins, this is just the beginning of it, and it could actually evolve in a very much increased adoption of any kind of DeFi protocols by major institutional investors. And as your both elliptic reports analyze in an excellent manner, there is a multitude of risks in all those DeFi markets, and I will just highlight just very few. The pseudonymity and the lack of AML and CFT controls. We know that the FATF has updated guidance, but the implementation is still lagging behind. We have a lot of regulatory and compliance risks that have to do with the fact that DeFi applications or part of the activity of DeFi could involve the provision of financial services in a non-compliant manner. And depending on the jurisdiction, for example, even governance tokens could have characteristics of investment contracts, of securities. And so we do have the provision of financial services in a non-compliant manner, depending on the jurisdiction. And then we have the key puzzle for our policymaking community is how to actually regulate and supervise those structures that do not have a single regulatory or supervisory access point, assuming, of course, that we're talking about truly decentralized networks. And then, of course, weaknesses in terms of governance, of market integrity risks, operational risks, and all those risks that come from the lack of any safeguard for investor protection. So I won't go deeper into this, but I'm sure the combination of the elliptic reports plus the OECD reports have a lot of details of the multitude of risks.
I think that's a really comprehensive overview. I mean, Barry, turning to you, I mean, is that generally aligned with some of the risks that you as a regulator in Abu Dhabi perceive? And maybe additionally, you could comment on a point that Jutta raised there, which is sort of this question around, well, can traditional regulatory frameworks really apply to this disintermediated space, and how you're thinking about that as well?
Yeah, thanks, David. And yeah, I think Jutta covers pretty much most of the risks we're looking at. So just to set the scene as a regulator, we very much see the possibilities of DeFi. We're very interested to explore that more in terms of building trust and accountability within that in order for it to flourish and grow. But I guess from our point of view, and hence some of the pieces we've put in our discussion paper around the kind of issues that we're concerned around, society must deal with. We can't not, as Ayota mentioned, we can't allow terrorist financing and money laundering and fraud to happen with impunity. It's just not good. So we very much want to, kind of look at the frameworks we've currently got, work with the DeFi community to understand, okay, what are the principles here? What are the outcomes that we're trying to achieve in both the regulatory world and the DeFi community world, and how can we therefore build trust and leverage both the expertise from both worlds? Because as regulators, we don't know everything. In our discussion paper, we proposed a few suggested areas, especially around the accountability piece, for us, there's very similar actors in some of the processes here, and we see some of the products actually look fairly similar to the TradFi world as well, though there are some very different aspects. So how do we deal with those? And as part of that kind of call for the DeFi community to come and sort of collaborate and work with us, we've sort of gone out and asked for the innovators in this area to join some testing with us in our Reg Lab. So this year's cohort is very much focused on DeFi, and we want to get close to the community. We want to understand the pain points, and we want to understand how could we do that? How could we regulate and supervise these areas with a view to making sure we don't impede innovation? Of course, we don't want to create more inefficiencies and more burdens on this really innovative and interesting area. And so, yeah, I mean, we are, I guess, kind of moving into new areas as well as a regulator and the regulatory community. Nathan might pick up on this a bit later, but moving from the virtual asset, digital asset world, and now DeFi, the regulators have had a very steep learning curve in this technology. And so, kind of, we're looking at, okay, what kind of issues are there now? We're now seeing issues in bugs in smart contracts that are only picked up during stress and duress. The unintended consequences of governance structures within DAOs, possibly leading to the ability for some nefarious actors to game certain scenarios. So, and also, are the economics set up correctly within some of this play, and so on and so forth. So these are the things we now have to look at through a technology lens as well. So on one hand, it's it's scary, but on the other hand, it's truly exciting, and we really encourage the community to talk to us and help us in that regard.
Thanks. I think it's a great perspective that really shows the way you're thinking about this, and in a way that are very proactive and but also very practical as well. Now, Nathan, if we could pick up on some of that with you too. I mean, I guess what's your perspective from I guess both with your work on kind of both the public-private spectrum about the practicality of trying to extend certain kind of regulatory frameworks to the DeFi space. I suppose there's on the one hand, the many DeFi developers will sort of argue that traditional financial frameworks can't really apply to them because they're not centralized, and regulation was created for heavily intermediated environments. But if you look at something like the FATF's guidance from October of last year, which I referenced at the beginning, the FATF really argues that look, despite the claim of most of these protocols or platforms to be decentralized, there often is a controller or set of individuals who are able to influence these networks and can be regulated as you would regulate any other, in this case, virtual asset service provider. What's your take on that? I mean, do you see that as sort of a workable framework, or do you think there are going to be substantial points of tension there when it comes to trying to enforce compliance in this space?
So I guess I think if you take a step back, and you think about what DeFi should be in its purest form, there's significant tension. The way regulatory frameworks have been designed is that they aim to capture and they seek to regulate centralized parties. I think even taking a step further back, if we look at the way the crypto industry has developed over time and the way regulatory responses have developed over time, the majority of crypto activity, at least initially, was undertaken by centralized exchanges, custodians. It's quite easy to apply traditional frameworks to those types of entities. They're acting as quasi financial institutions already. They're acting as custodians. They're onboarding customers as a online bank would. It's actually, even though it's still been a challenge, but it's actually been quite easy for policymakers and regulators to just effectively copy paste what they've been doing for other industries and applying it to these providers. Moving towards DeFi is where I think, one, there's definitely, that's where the innovation in this space is truly happening, in my view, in a lot of cases, although there's, again, I have full respect to what centralized exchanges are doing, of course, and there's a need for centralized exchanges, but these areas of innovation they don't quite fit with within the traditional regulatory frameworks. If we look at the current state of the industry today, though, maybe playing devil's advocate and putting my regulator hat back on, I would tend to agree with some of the stuff FATF is saying, in the sense that a lot of the DeFi protocols right now are probably not as decentralized as they should be. And I'd probably argue that DeFi is used extremely loosely in a lot of cases in the industry as well. So when you do have a DeFi protocol that, for example, has been developed by the same group of people, the same group of people are providing a front-end interface to it, they're providing Oracle data to the protocol, it doesn't really feel like DeFi anymore. And that's where I think regulators can really draw attention to these activities and say, wait a minute, actually, you're just building a financial business or financial services business on top of decentralized technology, which it's not really pure DeFi. And it's hard, I think, for these types of groups to argue that the traditional means of regulation won't work. So that's why I think the FATF is indicating that where there is a party that has this, and they frame it as sufficient influence or control over a protocol, in theory, they should be regulated as VASPs. And I think that's where a lot of friction is coming right now. If you did have a DeFi system that was truly decentralized, in theory, there wouldn't be anyone to regulate, or at least at minimum, the regulated functions are split between multiple participants and the traditional frameworks wouldn't work. So I guess, yeah, maybe a long-winded answer that I think right now, the way the industry is shaped, a lot of DeFi projects are becoming targets because they are probably a lot more centralized than they claim to be. But if we do move to a position where we do have this pure decentralized model, and there are players out there that are working towards it or are, I guess, quite decentralized at this stage, the traditional methods won't work, and we do need to think of more innovative approaches, in my view.
Sorry, Barry, did you want to chime in there?
Yeah, I was really enjoying Nathan's appreciation of the situation. And I guess just to sort of add on to it, when you look at the frameworks, the regulatory frameworks that have been built so far, back in 2008 or so, back then after the crash, they are all based on centralized finance. And if there's an interesting paper, I can't remember what it's called right now, but if you look at it from sort of that period of time, regulation is like archaeology. You can dig through each layer and see what the industry was doing at that moment in time, or a little bit ahead of that at that moment in time. So regulation just catches up to regulate what's there. So we have so part of that, going back to why we find it so exciting, is we have an opportunity to completely reimagine, and going back to Nathan's point, reimagine what regulation should look like or could look like in that fully, really, truly decentralized DeFi world, if it's possible. And so we're really interested in kind of exploring that and understanding what we can do and what we can't do. So yeah, sorry, just thought I'd chip in on that bit.
That's great. And that's definitely a point I hope to come back to in the session. Jutta, do you want to chime in on that point?
Yes. Just to say that I totally agree with what Nathan and Barry just said, but we need to also highlight that decentralization is very difficult to actually establish. It's kind of a spectrum rather than a binary situation where something is either decentralized or not. What we can say for sure is that today, most of the protocols we actually see have this kind of centralization pockets, so to make it easier for people like Barry to actually impose enforcement. What is also important to highlight, though, is that one of the biggest hurdles, in addition to the lack of central regulatory access point, is the fact that the truly decentralized platforms do not have defined geographic location, and it's very difficult to establish jurisdiction. So this kind of jurisdictional uncertainty is challenging enforcement. And we've seen it's so easy and so fast for these kind of structures to change location. And this is why it is crucial to actually have international coordination to avoid regulatory arbitrage in the way we actually discuss and apply regulatory frameworks.
Yeah, I think it is tremendously interesting, and I think the concept you note there of kind of pockets of centralization is an interesting concept in terms of how things seem to be evolving at the moment. One thing I did want to touch on for a bit is something that's maybe related to a current event at the moment, and that relates to a lot of the news. I think most everyone in the audience is probably familiar with at this point around the collapse of the Terra USD stablecoin. Many of you may have seen that Terra, one of the larger algorithmic stablecoins around, crashed the price, failed to maintain its peg to the US dollar, and has led to billions of investor dollars being wiped out, which has led to a lot of discussion about the appropriate regulatory responses to stablecoins. But stablecoins are quite a critical component of the DeFi ecosystem. They're used to facilitate on and off ramps into DeFi. They act as collateral in DeFi markets. And just think it leads to an interesting discussion around what if any lessons does something like the UST saga present when it comes to oversight of the DeFi space or even crypto markets more generally. I'm not sure if anyone wants to start by opining there. I know, Nathan, you've published some things on this very recently, so maybe if you want to weigh in first.
Happy to. Yeah, I think there's a few things with UST. I think one of which, and you've touched on, is that it is going to draw a lot of attention, negative attention potentially, to stablecoins probably as a whole, even though UST is one small subset of stablecoins, being an algorithmic stablecoin. So I think there probably will be potentially an overreaction to stablecoins in general, which probably is not warranted given that it's just a small subset of stablecoins. I guess, again, maybe putting my regulator hat on again, regulation is all about protecting consumers, right? So what could we have done to protect consumers when it comes to these types of stablecoins, which are stabilized in value, but more through like mechanical means without necessarily having assets backing the value of these coins? And there's a few things. One is, what is the ability to respond under significant stress? What sort of controls are in place to protect consumers when these events happen? Another one is disclosures as well. So as a consumer who is potentially using these stablecoins, are you aware of the risks? Are you aware that these stablecoins might not be maybe not as safe, but are just stabilized in a different way to the more common stablecoins, which are backed by real world assets? So there's probably the two key points I would focus on. Really, it's just sort of consumer protection and disclosure to consumers, and as well their ability to respond under stressed scenarios.
Yeah, and Jutta, so you.
Yeah, so if I can add to Nathan's excellent point. So what is very interesting with the Terra situation is that this was an algorithmic stablecoin, right? And what we have been focusing on is the risks of what are considered even safer ones, the ones that are backed by actual reserves. And we have stated in our last report that stablecoins for us are the key bridge between decentralized finance and traditional finance. And there are huge risks that are related to concentration, to transparency around the reserves, to the credibility of the reporting about the reserves, to redemption rights that we are not sure of. And this kind of run risk scenario was something we described for the likes of Tether rather than the likes of the stablecoin, of the algorithmic stablecoins. What is interesting is that, as Nathan mentioned, the stablecoins are actually one of the foundational bases for DeFi, and are one of the few things that we think can bring the DeFi market to its legs. And at the same time, it can have an effect, a spillover effect to traditional markets, especially the ones like Tether, who have significant reserves of actual short-term debt and commercial paper. Now, in the situation of Terra, what is a parallel that we need to underline is the loss of confidence. The loss of confidence is a huge risk. And we saw that not only did people who were holding USD lose all of their investment, but we actually had a spillover effect to Tether, losing also its peg, even if they managed to bring it back to its peg. And we had 7 billion of redemption. And now this is the actual huge risk of having this spillover effect to other stablecoins and then to traditional financial markets. And this is why we need to continue evaluating and mitigating the risks related to those stablecoin arrangements, and trying to find ways to have standards that are followed so as to protect consumers.
Yeah, thanks. There is a sort of good point I wanted to come on to next, and I think we've alluded to a bit, which is, to what extent can DeFi be reconciled with regulatory compliance, whether it's anti-money laundering space or consumer protection or otherwise. And I think there's sometimes this perception that DeFi and regulation or compliance are antagonistic, but I guess an open question there is, can regulatory compliance actually be a driver of growth and development for the DeFi space as well? And so, yeah, Barry, I'd just be interested in how you're thinking about those types of issues from the perspective of a regulator, and what you're seeing from the industry on that point.
Yeah, I also just wanted to quickly go back. My colleague just reminded me that one of the founder involved in that incident was also involved in another issue with the stablecoin. So I guess one of the learnings for us as a regulator is, the individual. Do we know the individuals involved? Of course, sometimes not. And therefore, some of the excellent answers and points made by both Nathan and Jota around the kind of issues and what we see is definitely around that accountability, and how do we do that? Can we do that? So sorry, I wanted to just jump back into that bit piece first. And yeah, sorry, the question, could you just remind me of the question on this one?
Oh, yeah, no, sure. So yeah, just sort of around to what extent is DeFi innovators in the DeFi space prepared to comply, and to what extent can regulatory compliance ultimately be a driver of growth for DeFi as opposed to something that's hostile to it? Just interested in your perspective as a regulator in terms of how you're thinking about that and what you're seeing from the industry on that side.
Yeah, cool. So, I mean, in terms of the engagement from the DeFi community, we started that outreach. Colleagues have had a number of conversations with some of the community. It's very similar to the early conversations we had with folks in the virtual asset world, insofar as, we kind of almost, I was reminded of a roundtable we had at the Japanese regulator a while back, where we had some of the kind of developer community from the virtual asset space sat on one side, and the regulators are sat on the other, and it became apparent, the kind of penny dropped for the developer community on that side of the fence, is that we're not here to stop innovation. We're not here to we're here to try and legitimize what you guys are doing. So help us understand what you're doing, and then by doing that, hopefully the regulatory frameworks that we build will enable you to grow and scale and prove your trustworthiness and your credibility. And so that's the same kind of approach we're hoping to have with the DeFi community. And there may be certain areas where frameworks don't work. The FATF travel rule is very difficult and tricky, and so on and so forth. So are there other ways we can do that? But we need the community to tell us what's possible, what's not possible. And hopefully between the two kind of communities, we talk and we can actually build something that really is leveraging and tapping on the true potential of this.
Yeah, thanks. And I mean, I guess, Nathan, to follow on that, I mean, what do you see through your work with the private sector, and kind of, those in the DeFi space in terms of, steps they might be taking to try to comply with regulation that's either, affecting them already or is sort of, pending or that they could face?
Yeah, so I guess, I'll take off my regulator hat and put on my private sector hat. It's difficult. I mean, looking at the private sector, you're always going to have a small subset of the industry that are still very inherently anti-regulation and they want everything to be the way it is. But realistically, that's not going to be the case. We will see regulatory development, specifically in the DeFi space. And a lot of projects do want to comply, but they want to comply with sensible regulation that really fits for them. One of the risks I see is, again, because it's been so easy to just apply traditional regulatory methods to the crypto space as a whole, and even some of the DeFi that exists today, is basically creating this like permission-based DeFi with requirements that are the same as other financial institutions, and you're just creating this sort of wall. And you're going to have this permission-based DeFi, which is regulated the same way as everything else, and you'll still have this pure DeFi that exists completely unregulated because it's almost impossible to identify who's actually driving these systems. And I've always used the example actually that for me, Bitcoin is probably DeFi in its purest form, right? So you have this decentralized payment system that no one can really regulate or control. And regulators aren't scrambling to implement requirements on Bitcoin right now because it is a permissionless system. So there will be certain DeFi systems that could potentially exist similar to Bitcoin, but it's coming up with sensible standards and, again, focusing really on the activities that different parties are performing. Again, you look at DeFi, you can't really identify a single party controlling it many times. And often at times, which is very different, is that the sort of building blocks towards a DeFi system can be operated by different parties. So you could have one party that's only providing Oracle data to a DeFi system, which is otherwise quite decentralized. Rather than trying to focus regulatory attention on the developers, at times the Oracle is actually probably the biggest area of weakness. So potentially think of standards around oracles and the provision of data to DeFi protocols. You might have other parties that are providing liquidity to a DeFi protocol. So what sort of control do we think those providers should have in place? So really it's about breaking apart regulation, and rather than focusing on the whole, trying to break it apart into its key components and thinking of what makes sense for each of those components would be my view from the private sector side, I think.
Oh, Jutta, I see you.
Yes, if I can continue on what Nathan just said, I completely agree that one of the easiest ways to go about it is to break it up and see where existing frameworks can actually apply and where we have gaps, and to think a bit more flexible also in the future about new kind of risks that are, for example, linked to the fact that we have so much open source code without audit, smart contract underlying code that needs to be audited, or to have regulatory compliance that is machine readable. We need to start thinking in a bit more flexible way. But just two small points on what Barry mentioned about multi-stakeholder dialogue. This is something crucial. It's not something that our policymaking community has been used to, but if we don't bring in the software developers and the engineers and everybody that is key to this kind of DeFi space, we will never make it. And the second thing has to do with incentives. And it goes back to Nathan's comment about institutional versions of DeFi protocols. What we have seen with at the OECD in our recent analysis is that most of the activity actually today, at least in lending DeFi protocols, comes from professionals or institutional investors. So there is a big incentive for the protocols to make it easy for institutional investors to comply and to actually participate in a compliant manner if they want to grow. And I think that this is the way that the market will self-resolve itself in terms of compliance.
Yeah, it's really fascinating. And I think it just, some of the points that you both made there, I think just show what the amount of work that really needs to go into this and, making it all possible. I think there was something you mentioned there, Jutta, about, the need for regulators to take on, new forms of multi-stakeholder engagement. And that kind of segues into I guess the final topic I wanted to touch on a bit before we maybe go to some audience questions, but that's around, what opportunities might DeFi offer when it comes to regulatory supervision? Are there possibilities for DeFi and and related to the transparency of the blockchains on which it's built to offer new paradigms or approaches to supervision of these type of entities, or new forms of interaction between regulators and the businesses they supervise? There's actually, I think, a great and very timely paper that was released this week by the Bank for International Settlements, a sort of a working paper that they called Embedded Supervision: How to Build Regulation into Decentralized Finance. And the thesis of that paper really is that because DeFi is built upon public, transparent blockchains, regulators can effectively harness a lot of that information directly, rather than building supervisory approaches that are built on demanding that supervised entities just supply them with in-house data and report based upon the information they collect kind of within their own silos. And it opens up a lot of really fascinating questions that certainly in theory you could envision a set of regulatory frameworks or approaches that are quite revolutionary compared to what we have now. Just really be interested to again get thoughts from all of you on what that might look like, or whether you agree with that perspective. Barry, let's start with you, and we'll go around the panel.
I'm gonna do a Nathan and take my kind of regulator hat off and put my research and innovation hat on kind of piece. And so there's so this is kind of a little bit early on in terms of the work we've undertaken, and where it might go is still kind of hypothetical. But so what we're looking at do is fully digitizing our rule books for a number of different reasons. And what that means is, so we've trained a couple of models to basically break down the language that we use within all the paragraph sentences and then the 30 odd rule books and so on and so forth. And what that's enabled us to do is kind of put these kind of concepts into different buckets. For trying to really simplify this, but essentially we've created a knowledge graph of our rule books, and what that enables us to do is kind of look at different areas completely, rather than just PDF documents. So for example, we can look at all risks. We can run a query and look at all risks around holding client money, and what that will do in terms of like a graph database, it will bring back all the nodes where the AI model has identified those specific references and any risks in the language that's being used. And we can then see all the linkages between those concepts and so on and so forth, and where they're more clustered around particular entities or particular products and so on and so forth. So that's the first step. The idea would be obviously to provide that as open source for the community to look at and play with. So that kind of goes back to engaging the community in a different way. So we're trying to, rather than kind of give it in legalese and language and words, can we represent our rules in a really much more digital manner, i.e. knowledge graphs, and kind of let the data science folks have a look with it and play with it and so on and so forth. The idea being, at some point, is it possible to see potential areas where it might make sense to have templates for smart contracts based on the regulation and rules and so on and so forth. So in an ideal world, if I was to fast forward and it's all successful and everything goes to plan, it'd be lovely to be able to provide the DeFi community, with a set of templates based on the different types of activities that they're thinking of, or the smart contracts cover, and therefore, we can kind of the embedded regulation or supervision is there. The other kind of pieces around that is, can we get, in terms of the dialogue with the developer community, can we provide some means of like accreditation, regulatory certificate? Now that's a bit further off, and I don't know if that's an area we can get into, but it's certainly something we would love to explore around. If a developer, for example, was to come in and sit with us for a bit and learn, why we're doing these things, the principles of the outcomes we're looking for. And you can almost see some sort of like certification. They've been through the regulator crash course, for want of a better word. And as regulators, we know then that community has someone that fully appreciates why we're doing these things. So a couple of ideas we're thinking of, but like I say, they're very much in the research and kind of early days piece.
Yeah, it's exciting stuff, quite fascinating, and I think just will be really fascinating space to watch over the next few years. Yeah, and then Nathan or Yota, any thoughts on that before we turn it over to the audience? Either of you'd like to chime in?
I can add something to what Barry was just describing. In my personal view, we are still in early days of RegTech and SupTech, and it will take some time to get there because there is the educational and the upskilling of the policymaking community is something that's going on now, but of course we need to give it some time. And in theory, we could end up with the supervisor being a node in the decentralized finance protocol or market or whatever. But this is a theoretical kind of speculative way of seeing things, and we still have a long way to get there.
That's just reminded me. So one of the things we mentioned last time we had a quick chat was around the concept of perhaps a regulatory focused DAO, for example, and the community, a truly community driven regulation where the regulators in there, different regulators. So this is potentially where it could kind of do the cross-border piece and solve for that interoperable kind of the regulatory dialogue across different jurisdictions, if there was that sort of mechanism to do so. Now, I don't know if we ever get to explore that as a regulator just yet, but that's something that, again, if I put my research and innovation hat on, is something that we're certainly kind of at least looking at and seeing if it's possible or not, and how it would work. So that's a really interesting reuse of the same technology as you mentioned. You have to be in a node is something we're also looking at. So we're looking at building sort of test nets on Ethereum and maybe even Hyperledger and Corda and other bits and pieces, just to see what it looks like as a regulator being party to some of this kind of DeFi activity. Yeah.
And just one last thing, if you allow me, David, we are discussing how the regulator can actually implement these kind of tools, but we should also not overlook the fact that the industry itself and the protocols themselves, they can start using compliance tools or other mechanisms such as audit of their code by third parties, just to give confidence to the small investor who doesn't have the knowledge of how to write code, for example. So there are other things as well that can complement the effort of making this kind of environment safer for investors.
Yeah, and I think, maybe just to conclude, I guess, on this, and just to build on what Iota said, I agree. I think with DeFi, there's an opportunity to achieve the necessary regulatory outcomes in different ways, potentially. So I think if regulation is more focused on what outcomes you're seeking to achieve, maybe be a bit more principles based and outcomes focused, what do you want to see mitigated in terms of risks? I mean, when you look at AML CFT, for example, you want to make sure that you're identifying people, that criminals aren't able to abuse these systems, that you're able to scan for sanctions, and everything that comes with it. It doesn't mean you need to apply the exact same rulebook that currently exists to meet the same outcome. So embedding some sort of not just supervision, but also having controls in place, be it automated controls in place on the DeFi protocol level, or by someone that facilitates interaction with DeFi protocols, it could potentially achieve similar outcomes. And I guess I'll give a nod to Elliptic and other blockchain analytics companies that could potentially facilitate a way of automatically scanning for risks from an AML perspective, for example, on the blockchain, and embedding that into the actual DeFi system itself, and achieving outcomes in a different way. So I would, and again, this is maybe an idealistic view, but it would be great to allow for this innovation to continue to flourish, while also mitigating the risks and not necessarily just copy pasting what we've done in the past and trying to come up with new and innovative ways to achieve the same outcomes that we want.
Yeah, it's a great point, and I can certainly say, as you alluded to there, I mean, it's something very much on our minds and higher on our agenda too at Elliptic, is thinking about how we evolve these sort of blockchain analytics and reg tech solutions, I suppose, for lack of a better term, to this new environment. Are there new ways of designing and delivering these sort of compliance capabilities? So yeah, it's all very exciting, and hopefully in 10 years time we'll be able to reconvene and have a very different conversation about what the world of DeFi looks like, with regulatory DAOs and all that kind of thing. But we've got about 10 minutes left, and I did want to just turn to a few audience questions with the time we've got. One question someone submitted, which is much a broader question, not really focused on the regulatory or compliance aspect of things, but just more about the sort of the utility of DeFi and its kind of key use cases. Someone asks, is DeFi genuinely more inclusive, or likely to be, and can it facilitate financial inclusion for those who are left out of TradFi, or is it merely likely to be profitable for people who are already profiting from TradFi or for TradFi itself? I'm not sure if anyone wants to weigh in on that, and thoughts you might have. Is Jota, you raising your hand? I know you just did your paper on TradFi, so let's hear from you first.
So in theory, decentralized finance is all about inclusiveness and getting the underserved clients of financial services serviced. But what we see in practice is that at the moment, it is mostly used by the professional or institutional investors, family offices, hedge funds. And the reason being is that, in our view, and this is what we are analyzing in our recent paper, the fact that there is a potential for uncontrolled leverage of mainstream crypto. Now, what is also very interesting is that if we see the breakdown of transactions in decentralized finance, and we use the proxy of transaction size as a proxy of who is actually trading, we have almost 2/3 of the activity being done by professionals and not by retail, the small underserviced client. And the second thing I would like to add on this, which is a paradox, is that the kind of operational challenges that we have in terms of fees, transaction costs, make it very difficult to the underserviced client to use DeFi for financial inclusion purposes, because the smallest transactions are actually becoming uneconomical when we have network congestion and then high fees. So it could, in theory, be a solution to promote financial inclusion, but we do not see it at the moment.
Yeah, any other thoughts about that one, Nathan or Barry, before we move on to the next question?
None for me, really. I agree.
Yeah, cool. Happy to move on. Another question someone posed, maybe follows on from that, is, are there any efforts out there among users or customers of DeFi services to push proactively for consumer protection? Are the people who are using these services sort of actively seeking out better protection in these markets? Maybe that builds on the point that you made a little bit, Jota, which is, the average consumer maybe isn't really interacting with these protocols yet. But yeah, I mean, how do any of you see that shaping up? What's the picture at present, and how do you think that might change, if at all?
I would probably say, and again, this is making a very general comment, but again, because DeFi is still quite new and you need to be quite crypto savvy to interact with DeFi protocols, I think the majority of users kind of know what they're getting into, in the sense that it is unregulated, they understand crypto quite well. So I probably wouldn't say that there's a huge drive for consumer protection from the consumer perspective right now, because DeFi is being used by, I guess, more crypto savvy people. Where I do see risks is that as DeFi continues to be adopted, that's where the more traditional consumers might be directed or driven towards DeFi, and that's where they can be abused, essentially. And I think that's where there's going to be a much greater need for consumer protection. That's maybe more of a general view of how the market's moving right now.
Yeah, I totally agree. And if I think about, sort of put it into this perspective, if you're thinking about my dad, for example, getting into it and losing all his savings and pension because he wasn't fully aware of what he was doing, where it went, and what happened, so on and so forth. And there's no recourse. There's nothing to get back. Then that makes me really want to put consumer protection in place. Yeah.
And then I guess again, I don't see many people providing liquidity on Uniswap without really being quite deep into crypto, at least from the first place. So I think the immediate risks are probably more like on the sort of centralized exchanges. That's where people, I guess, are more like traditionally onboarded into crypto in the first place. But it's not a big jump, to be honest. I mean, it's quite, you can easily move from a centralized exchange to a self-hosted wallet and then into the DeFi world.
Especially because nowadays we have a lot of fintechs actually creating customer-friendly user interfaces to get into the DeFi space, and this is where most of the risk lies for the retail investors. I agree with Barry and Nathan.
Yeah, thanks. Appreciate that. And one other question that came through is around sort of how regulation might apply to the space. And I think someone notes that, for the most part, when we talk about applying regulation to the space, we're really still talking about regulating certain providers of certain services or functions within the ecosystem. But at some point, may it be necessary that regulation needs to focus on like the actual writing or coding of smart contracts and actually intervene at the protocol level. Do you have any thoughts about that, and whether that's desirable or necessary at some stage? Barry, do you want to chime in first? Or sure.
Yeah, of course. Yeah. So I think back when I was back at the FCA, it was very clear whenever I kind of suggested at some point I can see us having to review code. At some point, we're going to need folks that can spot issues within smart contracts. It was very clear that at that time, the feedback was we're not a technology regulator, and that's something that regulators really struggle to reconcile with. And I always kind of laughed and kind of responded flippantly, I guess. But when you go into these big entities that you're supervising, and you're looking at, are they compliant? Guess what is underpinning everything that they're using. Every decision that they make is recorded, and some of it's automated, of course, and that's all done on technology. And you're hoping that they've got all of that in place themselves, which is cool. But now we're kind of looking at it from the point of view of DeFi, and then and there's no centralization in this concept. Then what do we do as a regulator in that scenario? So I can see the move towards it. I can see, or at least regulators requiring some third-party audit in some shape or form to provide that kind of comfort that the smart contracts are being written well, and there's no kind of unintended consequences in whatever's being designed. Maybe 3 or 4 smart contracts linked together, operating in different scenarios, but one triggers another based on different if this then that conditions. What happens if all the scenarios haven't been tested? Of course, it's hard to test all scenarios, but what happens if there is a scenario that stresses those particular contracts and then something unintended happens? So I don't know how we do it as regulators just yet, but it's certainly something that the only way we can start doing that is obviously getting closer to that developer community ourselves, and maybe even bringing in developers within the regulator themselves. Now, we've seen in other regulators, they're bringing in data scientists. So if you're looking at it from the point of view of the regulator becoming more data-led, then is it such a leap for them to look at the code as well? So sorry, not really a straightforward yes answer, but I think there is a move towards it. Certainly in ADGM, in the regulator here, we are not adverse to at least thinking about that. Yeah,
I would say we need to be really careful, as maybe thinking as a regulator again, of bringing developers into regulation if the sole function is that of developing. I mean, anyone can be paid to develop a banking platform, and the operators of the platform are the ones that are regulated. So if a developer is just deploying code onto a blockchain, provided it isn't malicious, obviously there need to be protections in place if you are deploying malicious code with the intent of basically scamming or stealing from people. I would try and stay away from regulating developers. But at the same time, again, this space becomes very blurry. Usually the developers are the ones providing an interface to the protocol. There's often fees involved, and they're benefiting from deployment of these protocols. I think very importantly as well is disclosure. So if you provide a front-end interface to a DeFi protocol, you need to be clear in what you are telling people. And here's why I think audits as well are quite useful. As Barry said, I mean, if you could easily have a front-end interface to a lending platform and say that the interest rate's 20% when the underlying code is actually 10%. So those are the things I think that are very important in terms of DeFi, in terms of focusing on the front end, disclosures, audits of code 100%. But I guess the developer, again, it really depends on what the actual role of that particular developer is. But so to the largest extent possible, I still believe that regulation should be as technologically neutral as possible and focus on the activities that people are undertaking, which definitely will have technological implications.
Well, I think we're at the end of the hour now, and I think that's a great place to leave off. Leaves a lot for people to ponder and to consider going forward. And I think this is a topic I know we were all saying before we could talk about for hours. So we may have to do a follow-up conversation one of these days, because I know there are a lot of questions out there about it. And yeah, as I said, maybe we can all reconvene in a decade and see if all the predictions about regulator DAOs and embedded compliance and supervision have come true or not. So do just want to thank our three guests today for taking time out of their very busy schedules and offering, I think, really outstanding and thought-provoking insights. So thank you, Nathan, Yota, and Barry for your time today. And thanks to everyone for joining, for asking lots of great questions and being part of the discussions. So thank you all, and everyone enjoy the rest of your day wherever you are.
Thank you. And thank you for hosting, David.
Thank you.
Thanks, everyone. Bye-bye.
Bye.
Thanks. Bye.